You're not alone. But what if making money with the stock market was as easy as using an app on your phone? In this video, we're showing you how to use stock market apps to start earning, even if you're new to investing. Before we jump in, make sure to like, subscribe, and hit the notification bell so you never miss smart tips to grow your money in confidence. Let's dive in, starting now. Choose the right stock market app. Not all trading apps are created equal. Your choice of platform can make or break your investment success. Look for apps with zero commission fees like Robinhood, Whipple, or Fidelity. These platforms eliminate the traditional $7.10 per trade fees that used to eat into profits. Consider user interface quality, research tools availability, and educational resources. Apps like TD Ameritrade and E*Trade offer comprehensive analysis tools, while Acorn specializes in micro-investing for beginners. Check for fractional share trading, which allows you to buy portions of expensive stocks like Amazon or Google with just $1. Security features are crucial. Ensure your chosen app uses bank-level encryption and SIPC insurance protection. Start with dollar cost averaging. Dollar cost averaging is your secret weapon for consistent profits. This strategy involves investing a fixed amount regularly, regardless of market conditions. Set up automatic investments of $50, $100, or whatever you can afford weekly or monthly. This approach reduces the impact of market volatility and eliminates emotional decision-making. Apps like Acorns and Stash excel at automating this process. When markets are high, you buy fewer shares. When they're low, you buy more. Over time, this creates a lower average cost per share. Historical data shows that consistent dollar cost averaging into index funds has generated 7 to 10% annual returns over decades. Start small and increase your contributions as your income grows. Focus on dividend-paying stocks. Dividend stocks provide passive income while you sleep. Companies like Coca-Cola, Johnson & Johnson, and Verizon have paid dividends for decades. Use apps to filter stocks by dividend yield, looking for companies paying 2 to 5% annually. Dividend aristocrats are S&P 500 companies that have increased dividends for 25-plus consecutive years. These stocks offer stability and growing income streams. Reinvest dividends automatically through your app to compound returns. A $10,000 investment in dividend stocks yielding 4% generates $400 annually in passive income. Many apps offer dividend reinvestment plans, DRIPs, at no cost, automatically purchasing additional shares with dividend payments. Master swing trading techniques. Swing trading involves holding stocks for days to weeks, capturing short-term price movements. Apps provide real-time charts and technical indicators essential for swing trading success. Learn to read candlestick patterns, moving averages, and support/resistance levels. Look for stocks with high trading volume and volatility. Popular swing trading strategies include buying breakouts above resistance levels and selling when stocks hit predetermined targets. Risk management is crucial. Never risk more than 2% of your portfolio on a single trade. Set stop losses to limit downside risk. Successful swing traders often achieve 10 to 20% monthly returns, but this requires discipline and continuous learning. Utilize options trading for income. Options trading can generate significant income when used correctly. Covered calls are a conservative strategy where you sell call options on stocks you own, collecting premium income. Apps like Robinhood and Whipple offer commission-free options trading. Cash-secured puts involve selling put options on stocks you'd like to own, earning premiums while potentially acquiring shares at lower prices. Wheel strategies combine covered calls and cash-secured puts for consistent income generation. Options require understanding of Greeks, delta, gamma, theta, vega, and risk management. Start with paper trading to practice without real money. Experienced options traders often generate 1 to 3% monthly income from premiums. Explore ETF and index fund investing. Exchange-traded funds, ETFs, offer instant diversification and professional management at low costs. Apps make ETF investing simple with one-click purchases. Popular choices include SPY, S&P 500, QQQ, NASDAQ 100, and VTI, Total Stock Market. Sector ETFs like XLK Technology or XLF Financials allow targeted exposure to specific industries. International ETFs provide global diversification. Index funds consistently outperform 90% of actively managed funds over long periods. Warren Buffett famously won a 10-year bet that index funds would outperform hedge funds. Apps often offer commission-free ETF trading, making them cost-effective for regular investing. Implement risk management strategies. Successful investing requires protecting your capital. Never invest money you can't afford to lose. Diversify across different stocks, sectors, and asset classes. Use position sizing to limit individual stock exposure to 5 to 10% of your portfolio. Set stop losses to automatically sell if stocks fall below predetermined levels. Apps make it easy to set these protective orders. Rebalance your portfolio quarterly to maintain target allocations. Emergency funds should cover 3 to 6 months of expenses before investing. Avoid emotional trading by sticking to your predetermined strategy. Apps can help by providing alerts and educational content about risk management. Track performance and optimize. Monitoring how your investments perform is one of the most important habits to develop if you want to build lasting wealth. Fortunately, most modern investment apps offer comprehensive performance analytics that make tracking your portfolio easier than ever. These tools provide clear insights into your gains and losses, how your assets are allocated across different investment types, and how your portfolio evolves over time. To truly understand how well your investments are doing, it's important to track several key metrics. These include your total return, the overall profit or loss on your investments, including price changes and dividends, dividend income, cash payouts from stocks or funds, and risk-adjusted returns, which measure how much return you're getting relative to the amount of risk taken. By paying attention to these numbers, you gain a clearer picture of how effectively your money is working for you. It's also essential to compare your portfolio's performance against relevant benchmarks, common standards used to evaluate investment returns. For example, many investors track the S&P 500 index as a benchmark for U.S. stocks. If your returns consistently lag behind the benchmark, it might be time to reconsider your investment choices or strategy. Keeping detailed and organized records is another critical aspect, especially for tax purposes. Document important information such as purchase dates, sale prices, and dividend payments. This record-keeping helps when filing taxes and ensures you don't miss any important deductions or reporting requirements. Thankfully, many investment platforms now integrate seamlessly with popular tax software, simplifying the reporting process and reducing the risk of errors. Alright, that's a wrap on how to make money with stock market apps. Remember, with the right apps and strategies, anyone can start investing and earning. If this helped you, give it a thumbs up and share your favorite apps or questions in the comments below. And for more easy investing advice, don't forget to subscribe and hit the bell. Catch you in the next one.